dissecting some of the things that Rodney's put forward in his excellent presentation just there, and sort of talk about this supply crunch and the regions that are bringing on supply, and what the rest of our panel sort of view there. Stuart, maybe you could do a short intro on Lake and talk to us perhaps about why you're an advocate of the lithium triangle and in Latin America, and how you're going to solve these issues with this supply crunch.
Yeah, thanks. Lake Resources is a pre-production company. We've based in Australia currently. We have 4 projects in Argentina. We're one of the few companies that have got more than a single asset. One of our projects, Kachi, we're scheduling to go to 50,000 tonnes production. That's at definitive feasibility study. Obviously, as Rodney said, we've been delayed through COVID and movement of a demonstration plant on site, which is now operational. We're due to ship our first concentrate to be converted into lithium carbonate as part of the test work that we're doing with Lilac Solutions out of California. That's due to go off this week to Saltworks for conversion. But yeah, we're pretty excited. And one of the reasons we're in Argentina, obviously, is because that's where the lithium is. Argentina's probably got one of the largest undeveloped lithium assets of anywhere in the world. And I've got another hat that I wear that I'm involved in Atlantic Lithium that's got projects in Ghana, which is a hard rock project. But in Argentina, we have seen a very supportive regional and federal government there. They've got a great opportunity there, but it is Argentina. It can be volatile, as Emily will no doubt tell us. But it's there, so that's why we're there. And we're excited to finally get this demonstration plant working and looking forward to bringing it through and de-risking this project, because what we're doing is different. No one's done it using direct extraction. Our partners, Lilac, are building out a fairly large facility in Reno. They've got 500,000 square feet where they're going to manufacture beads that go into the ion exchange column. So that's exciting. They just got 50 million from the DOE. So they've got a lot of support out of DC, and we're sort of running with that. We're their most advanced client. So there's a whole lot of interest and excitement about what we've got to so far.
Excellent. And so why did you choose Argentina for the projects originally, versus somewhere like Chile, which has historically had more of a lithium industry behind it?
The way it came about was that Argentina had been governed by a fairly intense socialist regime for a number of years, and was difficult. We watched the guys at Orocobre bring that project through eight pretty tough years, but leading into the election of the Macri government, we saw an opportunity, and Steve, our CEO at the time, who went and did project generation down there, did a great job of being probably one of the first people into the mines department after the election of the Macri government. So we saw, an opportunity to be there. We were able to peg just under 500,000 acres of area over 4 leases. And and after that, it became, a lot of people followed us in there. So we just got there early. We just got lucky, I think, in terms of timing.
And there's a good momentum there versus maybe some of the geopolitical things that are going on for lithium projects with Bolivia, say, or Chile at the moment, sort of slowing production down there a little bit.
Yeah, South America's volatile, and if anything, perversely, Argentina's probably the poster child at the moment of South America. But it's still Argentina, and it's always volatile. But you've just got to accept those risks if you're going to operate in South America.
Emily, let me bring you in, because you know Argentina very well, but maybe you could do a short intro for Luna as well, as a private company and a fairly new player in the space.
Yeah, absolutely. I'm still reeling from our very, very recent loss to Saudi Arabia in the opening match. So that one hurt. Just to give a little bit of background. So I lived in Argentina for 11 years and ran a consulting and advisory business focused mainly on lithium from about 8 years in. But over the last 2 years, I've relocated to the United States and started Luna Lithium, which is a lithium exploration company with a focus on the United States predominantly and other jurisdictions in the Americas that would be able to feed the growing use demand for lithium and lithium chemicals.
Excellent. And so what's your take on some of the comments so far in terms of where the supply is going to come online? What's it like working on a project in Nevada, say, which is very pro-mining, but maybe behind the curve, perhaps?
I'm gonna put it out there. I would like to get some drinks with the fine folks at which institute is it? The one that consistently ranks Nevada as the number one mining jurisdiction.
Yes. They come out every year and they put Nevada as most friendly.
I'd like to have a chat because if you've ever been to Nevada, friendly they may be, but friendly to traditional, the gold industry that kind of built the state. But in terms of friendly to developers or friendly to folks bringing new projects forward, Nevada and the United States is a complicated enough jurisdiction, right? So you're talking about a country that doesn't have a rich history of mining and mineral exploration, as well as layering lithium on top of traditional commodity sectors like gold and like copper, which everybody who's sort of been in lithium understands that the exploration techniques of looking for and understanding lithium assets, and especially the development of flow sheets for the extraction of lithium into lithium chemicals for cathode making, is a little bit different than what Nevada's traditionally known for. So for me, I'm very grateful to companies like Ioneer and like Lithium Americas, who have been, and you say in Spanish, the punto de la lanza, or the point of the lance there, sort of banging that drum for close to a decade so that folks like me have a less challenging time. But I think that when it comes to looking at jurisdictions for lithium, there's a bit of a grass is greener mentality, right? You'll see folks in Canada, bemoaning their system and saying they wish they had a project in Nevada or in the United States. You'll see somebody running into permitting hurdles in Nevada, wishing they were in Argentina. You'll see somebody in Argentina who can't seem to get, imports in and money out of the country, wishing that they were in Australia. And so I think that the necessity for management teams with good projects to be where they are, understand the challenges, understand how to work around them or how to find solutions is really important, especially given the extent to which the lithium market needs to grow in order to meet some of these supply and demand forecasts that we're talking about.
Excellent. Just coming back to what you're saying about the US with an exploration sort of sense and supporting businesses, new businesses, is it a permitting challenge? That's what I'm hearing? Is there not enough advocacy behind new permitting in the right regions? Anyone want to talk about that? And
I mean, look, permitting is challenging, and it's challenging especially when you don't, when you look at copper or gold or a more established commodity, regulators can look to 10, 20, 50, 100, 200 operating mines worldwide and understand what the best practices are, be in a position to properly or more closely estimate what the repercussions or what the effects of a project are going to be. When you're looking at lithium, especially in countries like the United States, they don't have 5, 10, 15, 20 projects that they're able to copy paste how to permit that. And then on top of it, I mean, the mining industry, we are not doing ourselves favors by looking like the good guys when it comes to a lot of the environmental catastrophes that are playing out in countries all over the world for improper mine closure, improper tailings dam management. And so it's an uphill battle for sure, but it's one that is jurisdiction specific, I would say.
Is there also an underestimation perhaps of how challenging the lithium sort of chemical refining process is, and to get to that battery grade quality, we sort of hear about it, and in terms of people from outside the industry or new capital coming in, maybe the OEMs downstream perhaps not quite appreciating how many people have actually done this successfully and how many skilled teams there are out there. Stu, I don't know if you can comment on that, the expertise part.
Yeah, absolutely. I mean, you're coming from a sector that 3 years ago produced 300,000 tonnes and looking to scale that to, let's say, waving 3 million tonnes in the next 8 years. It's a massive challenge for the industry. I mean, the mining industry is good and has traditionally solved for solutions really well. they innovate, and if the pricing's there, there's incentive pricing, they can throw money and use technology to deliver it. But I've been in the financial markets for over, well, I'm only 35, but let's say I've been in the financial markets for 35 years. It's rare to see demand of, copper doubling in 10 years has never happened that I'm aware of. So the supply, or gold, it's never happened. You're talking about a 10-fold increase in lithium, which is a specific chemical that suddenly has got new applications required at a higher spec. Suddenly you've got to find people to come and fill the void and deliver that. It's really challenging. And then, I don't know how it actually evolves, but there's a lot of upskilling. I've been around the industry for 7 years. I still don't know much at all. I'm scratching the surface, but it's really complex. So it's a massive challenge. But I actually think the industry will get there, but it's taking time. But it does need legislative support and permitting and things. To me, it seems crazy that governments around the world are happy to throw billions of dollars at the sector. The industry can fund itself. What it needs is permitting and access to these areas to get on with actually delivering. There's this urgency to build a supply chain. You're not going to be able to get anywhere near it without permitting, and that to me is one of the greatest challenges. And not necessarily only in America. In Argentina, that's probably one of our potential greatest risks, because a lot of the people that worked in the department have now been employed by the industry. So there's a real void there, and you've got to try and backfill that with people that are qualified to then sign off on the permitting. So it's it's cannibalizing its own success to a point in this early stage, and it is only really early.
Yeah, look, I mean, it's, they've mentioned, but if you look at water use, all sorts of other things, if you're talking acid, if you're looking at sedimentary and so on, there are some implications to producing this material without doubt. But as Stu said, at the same time, the problem that you have is as you're getting up to speed, the required spec sheets are getting tighter and tighter. So it's getting tougher and tougher to meet what is, you're down to parts per billion in certain impurities. So there's only a number of people that can do that, but it's all interlinked. If you do the permitting, if you realize it's going to take that extra time, which it always does. I mean, if you look, Orocobre is still at what % battery grade? I think it might be up to 40 now. Allow a lot of time for that to evolve. So if you're going to do that, you need to throw a lot of projects at it to get to where you need to be. And this is where I think it's this whole thing, it's not just governments, because OEMs and cell manufacturers and downstream people don't want to get involved in mining. They sort of trying to keep an arm's length. So how do you fund without getting involved? Well, we do think there's solutions like streaming deals and so on, and prepay, but it's taking time, and there's too much wishful thinking still in the system.
You mentioned it a bit in your presentation. The offtake deals are sort of there, but the actual equity and the sort of real capital.
I mean, that's why wouldn't an OEM sign an offtake if he's tied up the producer and he's put no money in? And then there's a little clause somewhere on page 3 that says, if you don't meet spec, I don't take your material. So the binding is worthless. And he's given nothing for it. So that's why they jumped in. And for a while, it worked in the stock market. People, I've signed with X, and the share price jumps. But now, that's not the case. And you're left with a few companies that I can think of that have now signed away all of the offtake and don't have the capital to build.
There's got to be a breaking point where the OEMs have got to see, real default on production and just come to you guys and say, we're putting in, what's going on? Let's accelerate this.
The question is, who's made the commitment? Is it the cell manufacturer? Or is it the EV? Because the EV guy goes out of business, but he goes out of business because the cell manufacturer promised him something. And therein lies, I believe that the South Korean cell manufacturers are way light. That's my opinion.
Interesting. Yes.
Yeah, I think I've had a number of discussions with car and battery makers over the last 18 months, and it was exemplified by the panic that we saw in Phoenix in the middle of this year, where normally you have these meetings and they're often secret and you're all wearing disguises and you're talking to a battery maker like 5 miles away from a conference. This took place in the coffee shop in the foyer of a conference where there were 700 people there, and people jumping up, going from Tesla over to Ford, over to LG to Liontown to it was just watching it all take place. And then weeks later, all these announcements were coming out. It was insane. And there was a real panic in the air. And I think you're right, Rodney. I think the cell manufacturers have gone out and filled up their forward order books with these massive orders that, in my view, can't be delivered because they don't have the supply secured to do that. And they've got the benefit of calling force majeure, where the industry, the auto industry as en masse, has probably invested close to $1 trillion to roll out, and they can't sell cars without a battery. So there's going to be, it's going to get pretty interesting in the next few years, because we're all talking 2025, 26, all these battery packs are due to be delivered, and I don't believe there's going to be enough lithium for one of the battery makers to deliver what they've got in their books.
It's also a case of, with some of these car makers and these battery makers, they are having to adapt as well to this growing demand, changes in chemistry, changes in a lot of different things. And within these organizations, they typically don't have in-house the type of people who are capable of looking at a project that is maybe 6, 7, 8 years pre-production and understanding the realities of what it would take to get from A to B to C to D, right? So it's not within the core competencies of the car makers or the cell makers to be making the decisions about who to invest in. Yes, they have the balance sheets. Yes, they are the ones at the end of the day who will lose out big time if we have these problems. But when it comes to, can these companies develop in-house technical capacity to be able to assess, provide capital to, but sort of shepherd that capital through, I still don't see that happening. And I still, I guess, naively hold out hope that we'll see, big, bad, terrible oil or some of the big mining companies who do have these core competencies, who do have experience in advancing projects like this, or understanding and selecting good projects at an early stage. But then also on top of that, understanding sort of the cyclicality of the market and the ability to build companies that can withstand these types of sort of buffets, if you will. I still think that those folks should be somehow the interface between the balance sheets from the car makers and the cell makers and the exploration and development portion of that supply chain.
Excellent. Okay, I want to just delve into some of the technologies that are changing the landscape, or at least maybe whether they're new or just slightly advanced now. DLE, there's a lot of questions that we get about it when we run the webinars and these content pieces, and I wonder what's the sort of future for DLE projects. Are all projects going to have technology of DLE integrated within them at some point? And is that really going to help us get around some of the sustainability controls around capital allocation, if we think about European funds, for instance, and how they might be mandated?
Can we strip out DLE into 3 categories before we talk about it? Because this is one of my, DLE, you've got membranes, you've got magical beads, and you've got solvents, right? And I think that they each deserve their own category, because having an opinion writ large on direct lithium extraction doesn't lend itself to a useful conversation. So can I? That's fine.
Let's delve into it. Who's the winner? And Stu, what are you using?
Well, we're using ion exchange, and interesting, we've stopped using DLE in our marketing material and things because it's very easy, as we've seen and experienced, being tagged with a totally different technology, and have to then explain why that wasn't us. So we're using ion exchange, which is an old technology. People think of desalination plants. The uranium industry uses ion exchange. Our partnership with Lilac is all around the beads. That's where their IP is. They've developed a bead that's made of a different material that's got a surface area that attracts the lithium ion. So it's very efficient. So compared to evaporation ponds, where you get anywhere from sort of 25 to 45% generally as an extraction rate, or a recovery rate, we would get somewhere closer to 80 to 90% recovery of the lithium from the brine. And where we also differentiate ourselves using the ion exchange process, we put the water, we re-inject that back into the aquifer as opposed to just evaporating it. So, and then when we flush the beads with hydrochloric acid, and before everyone goes, ooh-ah, the hydrochloric acid, the lithium binds to the Cl, the chlorine, and then we get hydrogen binds to the oxygen, creates water, which we capture and we repurpose during our processing. So our usage of fresh water is actually very low, and we're not evaporating millions of litres of water a year through the evaporation ponds. So it's a really efficient process, and it delivers a high purity product that then goes into the carbonate plant that then delivers a high purity lithium carbonate, and our results are sort of 99.95% or better. So it's exciting, but I have to say no one's ever done it. So we're still trying to convince the naysayers that it will work. We've done 4.5 years of test work. The demonstration plant now hopefully will prove that it's scalable, and it's a modular process. So it's simply if one module works, we've now got 4 modules working. It makes sense that if we've got 10 or we've got 50 or we've got 100 and they're all got the same stuff in them, they will all get the same result.
Scale out rather than scale up.
Yeah.
Which is a difference in the lithium industry. You know, a lot of the pilot plants in the conventional are like 500 tons, and then they go to 30,000 or whatever. So that's a massive scale up. With one thing in, I won't say DLE, I'll say Ion Exchange's favor, is that you scale out rather than scale up. And there's quite a few projects, so you can modulate. There is some engineering in it and pumping and all of that good stuff, but it is somewhat less of a challenge if you can get to that first step. But again, it's a question of timelines, and you can't even lump within those subcategories because every brine is different and has different, you know, materials in it, and you know, you've got different technologies and bead construction and so on, and flow rates. So it will be interesting to see. I mean, obviously it fits. You know, OEMs love to put that in, to say, you know, carbon neutral or net zero or whatever. So, you know, that problem's gone away, put it in a PowerPoint, but we wait to see it sort of play out, but it has a lot of appeal.
Yeah. Well, if we're ticking the scope 3 box down the line,
that's
yeah.
There's definitely, when you look at ion exchange or magical beads, kind of as I called it, some of the benefits to DLE technologies is they can unlock lower grades, right? You get a higher recovery rate of the lithium. And then there's 2 sort of important elements to water usage when you look at lithium extraction from brines. You have the necessity to extract a fluid from an aquifer system, and then that can in turn create imbalances subsurface. So if you're re-injecting the spent brines, then you're able to essentially nullify or offset that change to what's happening subsurface. But then on the other hand, you also still need fresh water to do the process, which I think Stu was clear on. But again, if you're having higher recovery rates of lithium, then your amount of fresh water per unit lithium could be lower. But on the other hand, as is sort of all things in life, a lot of things, they look like trade-offs, right? So as you are using this technology to solve for one element, maybe your use of chemical reagents or your use of something else that's messy somewhere else is going to go up. Or maybe your necessity for fresh water will go up, or your energy, and then you need clean energy, will go up, right? So it's important to, when comparing projects and comparing projects, first of all, to understand, are we comparing these against the same metrics, you know, and are we, you know, punching Peter in the face to murder Paul over here. But on the other hand, too, sorry, I always mess that one up. I'm gonna go to purgatory an extra day for that one. But no, to understand what you're trading off, right? Is it more clean? Is it more green? And this is where the life cycle assessment approach, I think, that's come into the demand side, right? The car makers will find its way into the investment side. I would be surprised if in a decade we don't have something that looks a little bit like a life cycle assessment in our 43101 or JORC terminology.
Yeah, it's everywhere now. It's so integral. Very good. Look, we have got a few minutes left. Why don't we open to the floor for questions if anyone has anything from Rodney's presentation? Yep, down the front here, and then we'll shoot over there. Thanks.
Yeah, so how can you explain the apparent disconnect between the flows of investment capital heading to the downstream segment as opposed to the upstream? Has the investment community lost its calculator capability?
The $1 million question.
Mining investors are mining investors, and when you're doing mining, mineral exploration, mine project development, you take a risk when you take an investor who doesn't know or understand that type of a space, right? Every time somebody in the lithium industry is needing to attract capital from a VC player or an OEM, it's an education process. And I think, Rodney and Stu will sort of hopefully have shared the experience with me that, we went through this Goldman Sachs nonsense in 2013. We did this whole, the price is going to go up and then it's going to crash. And as the tent gets bigger, or as the market grows and the amount of interest in the industry grows, those folks don't get to go back in time 10, 20 years and live through the last sort of couple of times. They'll see, okay, the price is way up. That means it's going to go way down. That means I don't want to come into this. It's a risk analysis, and there's a slide that I usually show where you show the kind of like Stu referred to, the growth of the lithium market. I don't do it in tons, I do it in dollar size, and I'm like, right, the market only passed $1 billion as the whole market sold in 2017, right? And if you put that $1 billion dot over the physical size of the gold market and then the physical size of the oil market, you're talking about a small market that's growing fast. And so from an investor standpoint, what timing, how does the money go in so that you can understand what the risks are and what the return is going to be? It's just a challenging and over and over and over an education curve that folks in the industry have to take when talking to these new capital players.
Thanks. Anyone else on capital flows?
And also there's just this lack of understanding, lack of knowledge. It's a new area. We're now starting to see battery metals funds appear, but ultimately the last 5 years has been generalist funds who very easy to play the sector by being long BHP and have a copper exposure, rather than trying to get into the nitty gritty and get involved in a junior lithium producer or explorer. So I think that's part of it. That's changing, but it's changing very slowly.
The other thing, Gunnar, is a bit like iron ore. For some reason, with these reports, the forecasted forward price of lithium is permanently in backwardation now in people's models, and it shouldn't be. I mean, it can't stay here forever, but it's going to be higher for longer, stronger for longer. But people just don't believe it. And the problem is, when we got into the industry, the whole lithium market total turnover was $1 billion, and no one cared at a brokerage. There's no money in it. Now it's 75 billion. People are sort of having a look at it, but it's a case of who's prepared to do the work to dispel the nonsense in the forecasts and invest in it when it was very small. That's changing now, so people will do more dedication. But is there enough, M&A or whatever else? If brokers don't see enough turnover in it, they don't want to write research on it. So they need to see deals. So junior mining has always been funded by equity, and it's normally retail, and it's a heavy lift when you've got a big capex project to do. So we're still seeing incumbents muscling in on a lot of projects here now and offering whatever terms. But if there are enough believers that this is now going to be, by next year, probably about a $70 billion turnover industry, will people take it seriously, and will the money finally find its way? If you think Rio's, I think, made $33 billion in the 6 months or whatever, and they bought one project. So, will someone start throwing money at this to give it the credibility? Because there is no transparency really in the futures. There's nothing there. No one really knows what the future price is going to be because you don't have a forward curve. So tough to fund as well.
Yeah, please submit one. And
I have a question actually for Rodney from the presentation. Can you give us an idea of what the costs are involved in taking an off-spec or technical grade product and getting it to battery grade? And a follow-up on that is, do you see any of these sort of novel cathode processes like Nano One or the like sort of changing in more than like a little step change what could be battery grade versus not?
So for the first part, it was probably around 1,500, but let's call it with inflation 2,000 now to do the conversion. The question is the capacity to do that. So and who can. It does depend on the material, but let's call it around that number. The second one, there's probably more tolerance in the LFP segment for them to do, what you're suggesting. I think I couldn't answer to the high nickel side, but the LFP, there's always been a broader tolerance in the LFP side to take that material on and put it into something.
There was a question down here, yeah, and then we'll jump over there, yeah.
Just a question for Rodney after your presentation. You have a comment that as you have large-scale battery plants coming online, there will be an increased percent of lithium in scrappage and defective cells. I'm curious as to why, as the projects scale, you have an increased percent of defective.
It's as they start, the consistency of the cathode material going in, so you've got to ramp up. You're talking about massive volumes. So as an example, CATL recently, my understanding was they had a 50% scrappage as they started their high nickel line. It does drop down, but I'm saying we're scaling so quickly. There's going to be more LFP. My understanding is production scrappage is around 10%, but on high nickel it can be as high as that, and then 30, and then drift down. But if you look at, I think the cell capacity is literally almost doubling every 2 years or whatever it is. So we're likely to see some off-spec to start, and then it'll improve. But it's not well established, so expect there to be more scrap.
Thank you. Gentleman at the front here.
Given the, Rodney and all three of you, given the what you said about the aggregate versus battery grade, and looking at BMX auctions from 1,500 or something now to 8,000 plus for spodumene 6%, where, and the equivalent of 82,000 for carbonate, I just see a huge disconnect. Where do you see prices settling, given that they might not stay there? I think they'll go higher. I think they might hit 90,000 for carbonate this year even. Where do you see prices settling and in the next year or two?
So my model is just, I've gone with every project with a fine-tooth comb, and we speak from the coalface to the traders, so we get a good sense of it. My gut says that prices will be flattish for the next sort of 3 years, but I have 65 to 70, so maybe slightly less, but it could be, it's a dangerous business forecasting lithium prices, but because you're bound to be wrong. But I would say flattish, and again, this is hope over experience that more spodumene mines are going to come into production, and that material will find its way to China, and there is some stuff potentially coming online. As I say, as soon as it's permitted, some of the DMS projects are very cheap. You can, the Atlantic, we're very keen on. It's got a payback of 20 weeks. So as long as they can get permitted, it's on its way. So I'd say 3 years flattish, and then hope over experience, enough production comes online that you taper off. But when I see reports of sub $20,000 a ton long-term price, that's lunacy. It's not possible. The marginal cost producer just cannot do that. So if you think people are struggling to get funding when lithium's 80,000, what's going to happen if it's 11? No one will get up. So my long-term price is 30 after 2030 as an incentive sort of level, and spodumene at about just over 2,000.
So the margins on offer to the companies, and then the revenue streams and the upside for investors is just incredible.
If you accept that, the what's implied in the backwardation in a lot of the valuation models is 15 to 20, and I just you go and ask the incumbents if they can be in business at that price for longer term. Never mind the 11 that go. No one can be in business at that price. Go back and look at Livent's earnings release when they were still sitting under contract at about 12 to 14,000. Not when the price hit 5 to 8. They were still getting double digits, and they were losing money. How do you grow if you lose money? You have to have reinvestment dollars here, and we've just had the question about, where's the money coming from? it makes no sense. So I believe early stage investments have still got a way to go. I'm happy to play in the small end space because I think it is stronger for longer. And if it is, obviously you're going to get a big payoff in the early stage projects. Because eventually, people will go for those. But I want stuff that can get into production fairly quickly, but it's early stage.
Very good, excellent. Any sort of final thoughts here? We've got a couple of minutes left. Emily, you want to touch on something?
I wanted to touch on, and I think let's chat about it later, guys. But the recent move by the Canadian government to say that Chinese investors in Canadian companies, no matter where those assets are getting the boot. And I wanted to see if Stu thought we'd see something similar from Australia or not, or if that has an impact, and then if you think that something similar could happen.
Yeah, more importantly, is this going to slow everything down, drawing these lines in the sand immediately?
Yeah, I was really surprised to see that, I have to say, but I doubt that it would happen in Australia, to be honest. There's a lot of, the Australian lithium industry relies heavily on the Chinese converters, so I'd be really surprised if that happened. But and then in Argentina, the Chinese are very dominant down there. So I've spent a lot of time in DC this year, and I'm happy to say there's now a very much enthusiastic and real effort coming out of DC to sort of look at Argentina as a potential source into the North American supply chain. Obviously now they're not within a free trade agreement or under the mineral securities policy, but I think I'm increasingly confident that something's going to happen there to assist Argentina come in under that, which will then give them the benefit under the IRA, because at the moment they don't qualify. It's only if it's processed in the US. So, yeah, watch this space. I think there's a lot of interest there. We've had a high delegation from Argentina in Washington recently, and there's certainly a growing interest in the opportunity that Argentina presents. So, and given that the Chinese are acquiring pretty much everything they can get their hands on down there, and that's not to say that I don't get 3 or 4 calls a week, but we're trying to remain independent so that we can roll out our other projects. So it's certainly it is a geopolitical sector, and pretty interesting moments right now where we've seen what's just happened in Canada. But I don't think we'll see much more of that, to be honest.
Excellent. Sounds good. Very good. Well, unless there's any burning questions. Yep, please, while we're here.
I'm asking specifically to Lake Resources, but when you acquired the land, were you aware of the technology issues that you were going to encounter, or did you sort of acquire it and realize that maybe you were going to need a new technology to make the project viable? So what I'm really trying to get at here is it, I mean, listening to everyone's comments, it's really, in a way, it's becoming about technology in the sense that it'll produce the right grade, but also it'll tick all the ESG boxes in terms of using as little water as possible.
You don't know what's under the ground until you put a hole in it.
Yeah.
Interestingly, the Kachi project was a maiden discovery. It had never been drilled before. When we acquired that area, we consolidated 7 different leases. And so when we drilled it, it's a low-grade deposit. It came in at averages like 250 parts per million. So it's, whereas in Cauchari, Lithium America and Orocobre are running sort of 500 to 700 parts per million. So it would be a very difficult project to do using evaporation. So, but it's also in a desert. So we didn't want to go out. The guys on the board at the time had done a lot of work in South America, in Chile particularly. There's always been issues there around water, and that was sort of increasing at the time. So we looked to find a way that we could not use evaporation as a technology. And at that stage, there were maybe 15 people globally that were doing work on various forms of extraction using different technologies. But now there's probably 200, and that includes the massive environmental water treatment companies like Suez, Veolia, Schlumberger have got a process. So there's a lot more to choose from, and obviously they're becoming increasingly efficient. So the opportunity is there, as Emily said. Some of these lower grade deposits that haven't been suitable for evaporation can potentially be brought in using technology, but they come at a cost. These things use power instead of evaporation, but if you can get it at the right concentration, then it works incredibly well. And if you look at the cash flow of, say, Lake, when we get this thing into production, the numbers that it throws out because of its efficiency in extraction are remarkable, and the cleanliness of the product. So that's our potential. We've just got to deliver it now and execute.
Let's have a round of applause for my panel. Very interesting indeed.